We've been actually very bullish on risk assets, equities, credit. Uh, Starting last summer, we started to tilt the portfolio into more cyclicals. We thought that the ultimately getting the virus under control would be the main catalyst. Clearly, fiscal policy is surprising on the upside, but we started investing in companies in the airline sector, the hotels, lodging, gaming, entertainment, aerospace, really playing this COVID recovery trade. And we had to invest back in the summer because, as you know, you have to skate to where the puck is going. Now what we're seeing is as that vaccination rate is picking up globally, there is that pent-up demand. If you look at forward bookings for air travel, for lodging, it is picking up. In fact, Europe just announced 2 days ago they are likely going to open for summer travel for Americans who have been fully vaccinated. The CDC came out and said they're likely going to allow cruising, the cruising industry, by this summer. So this is a very material change in terms of governments now starting to relax travel restrictions and quarantine restrictions for fully vaccinated people. That is going to be a huge catalyst. And so we have had position for that back in the summer. A lot of that is now starting to play out. So we want to be in cyclicals. We want to be in COVID recovery sectors, and basically be in companies that will benefit from what we think will be very, very strong earnings growth for the next 1 to 2 years, particularly in those cyclical areas.
So, Mark, I hate to throw cold water on this, but you know, the risks are certainly not over. There's still so much uncertainty out there. What could actually throw some hurdles in this recovery that we're seeing in 2021?
Well, I think the two main risks are going to be the virus and the variants. Do we ultimately get vaccination rates up to a level that allow for herd immunity across countries? And does that then allow governments to relax travel and tourism? That will be a huge factor in improving the service sector. I think we're well on our way to making that happen. It can take another 3-6 months. It could take a year for some of these emerging markets, but there is a lot of hope. These vaccines have proven to be highly effective, particularly at reducing hospitalization and death. So I think we're well on our way and we have a lot of optimism. The other risk is inflation. If labor market slack is not as high as what the Fed thinks, and people don't come back and participation rates in labor markets don't pick back up, you could actually start to see wage inflation, which could change the dynamics. The third risk really is higher taxation. The equity markets have to deal with eventually higher corporate taxation as well as higher taxes on individuals.